All right, everyone, here we are with ticker symbol NIO, NEO Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. Hope you guys find this video helpful and informative, and it means you all well. To all my subscribers, welcome back, and let's jump into this chart. So NEO didn't get anywhere near their resistance level, but resistance levels have changed. It was very volatile throughout the day, and we're going to see the highest point of the last couple hours of the day and one of the lowest points because our support has slightly changed, and it jumped through the 50-day moving average, fell right back below it, touched it again, and fell and leveled off right now at 21.54. So some important numbers here for Monday. This has slightly moved a little bit, and we're going to see what is going on for next week. So NEO has been obviously in this volatile state for a couple of days now, because if we zoom out, you can see that it's been jumping up and down in a sideways movement. Hit a low here that I had stated if that didn't recover from there, this would see newer lows. It did recover, and now it's kind of sideways. The tug of war is going to be interesting for the beginning of next week. Right now, again, we're at 21.54, and for the bulls to recover, they have to cross the 50-day moving average, which is 21.66. And then after that, to move themselves further away from it in an upward direction and confirm being in bullish territory, they're going to want to cross the first resistance level, which is 21.74. Turn that into a support and start to work their way up to newer highs, confirm that they're in bullish territory, and work their way up as far as possible from the 50-day moving average in an upward direction to test newer highs and newer resistance levels. But before that, obviously the bulls have to break through the 50-day moving average and then start to work their way up and turn 21.74 into a support to start to reach newer highs. On the other spectrum, we have what the bears want. The bears are already trying their best to keep this below the 50-day moving average. They've done it several times. Every time the bulls reappear, they bring it back down below the 50-day moving average, and their goal is to break through these support levels to move further away from the 50-day moving average in a downward direction. And that support level here is 21.32. If that gets crossed, this could start to see newer lows and newer support levels and start to get deeper into bearish territory. So I want to emphasize to all investors, pay very close attention to how the stock is reacting at 21.32. Put your 1 minute, 5 minute, 15-minute chart and see what is going on with the inflow and the outflow and who is dominating the chart. Are the bears bringing this one down fairly quickly, or are the bulls trying to reappear? Again, the bulls don't gain control until they break through 21.66, and then their goal is to break through resistance to hit newer highs and get further away from the 50-day moving average, deeper into bullish territory. But if at 21.32 it gets crossed and the bulls reappear, that's a good sign that they can build some momentum or stop this one from falling to newer lows. So you want to watch for that type of behavior. Or are the bears actually tearing through this and bringing this one down fairly quickly to newer support levels and newer lows? So pay very close attention to that as they move it further away from the 50-day moving average in a downward direction, getting deeper into bearish territory. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell by turning on all notifications to not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.